Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. All right, we're back. Here we are on site at the beautiful Grand Hyatt in the Bahamas. So Paul and I have been here for nearly a week now.
Yeah,
And
it's been great.
Been a great week. We haven't seen much of the sun, but that's probably a good thing because we got plenty of sun without even seeing the sun. So,
Yeah, they say you can get burnt through the clouds,
Yep, that's a fact.
and some people did.
They proved it.
Yeah.
Yeah. Yeah, but so Paul and I are down here with on a company trip for producers that, if you are one of the top producers in a company, they send you on a trip and you spend some time around other big time producers and get to know a lot of other men and women in the business and, share techniques and find out how other people are growing their business and helping more people and helping their clients. And they give us a lot of time for fun stuff. So it's been a great time. Some good work and then a lot of good downtime.
Yeah, some work, some play. And it's interesting to meet people that don't, IBC is our business. It's our business. It's the business that we like. It's the business that we enjoy. It's the business that we enjoy being a part of and then living in our own lives. But there's other producers out there that do pension things. There's these pension plans, or that do annuities, or they do a combination of both, or they do all three. They do a lot of life and they do a lot of all of it. And it's good to talk to those people just to see what else is out there and what other people are doing. And I'm a big believer that you can learn something from everybody. Even if they may not be specifically in your space. But of course, there's also a lot of IBC-focused people here as well. So it's good to catch up with them. You see the same people a lot of at the think tank and here.
Yeah, but there really are a lot of different areas of expertise that people have in this business, in the insurance business. Insurance, annuities, retirement planning, tax mitigation, etc. So yeah, a lot of great stuff going on here. We decided to be an expert in one area and not a jack of all trades. Not saying anybody who does more than one thing is a jack of all trades, because I think they're pretty much experts in several areas.
Oh yeah.
But we like being experts in this area. It's a lot of fun. So we had one. They usually have a keynote speaker at the end of the conference or the business part of the trip, and we had a guy, Eric Maddox, who spoke. He wrote this book, Mission Blacklist Number 1. Eric was a lead interrogator, trained interrogator in the Army, who helped hunt down Saddam Hussein. So he told that whole story. That was really cool.
Yeah.
But, what was the real ultimate point of his conversation?
He learned about people. He was interrogating people that were taken off the battlefield as whatever you want to call insurgents or whatever. But people that were taken off the battlefield that may or may not know where, in this case, where Saddam Hussein, or perhaps where somebody who knew that was close to Saddam Hussein was. So, they get the bodyguard, and then they get this guy, then they get this person who's like, yeah, he's over there. Very simplified version of the actual story. But he learned a lot about people in the process and how he had to find out, kind of discover what was important to this person, where I could make him just remind him, hey, this is important to you. If you don't give me the information that I know you have, this is going to happen to these people. Maybe the people that you think are your friends are going to round them up and do bad things to them. We can help protect them. And this guy was, at the time, a staff sergeant in the Army,
Right.
Relatively young guy. He's not too much older than we are now. But over hundreds of interrogations over a period of months, he learned a lot about what worked, what didn't work, and that people are the star of their own movie is kind of what he kind of left us with at the end of his 1 hour talk, and that we need to be a supporting role, for our clients, in their movie, right? And that's what he learned, and that's what he was able to bring to us, and it got me. I was taking copious notes, and so anyway.
And if he could talk to prisoners and these insurgents who would die for their cause supposedly, but they would then give information because he used empathetic listening and was able to show them that, hey, you're still the star. What's important to you is what matters here, and I'm going to help facilitate and understand what's important to you, but pull the information from you that I need. So that, maybe he ended up helping some of them in one way or another. But I thought that was really cool. And that's how we view ourselves. We don't want to be the star of anybody's movie. Like you, the listener, the client, you are the star of your own movie. You're the one making the money, who's going to be paying the premium, who's going to be creating all those benefits for you and your family down the road. We are merely guides. We are here to help. We're here to guide with the expertise that we have in this area and the experience we have working with hundreds of clients over the last 5 years. So that's really our role. So we don't want to be the star of your movie. We'll be a supporting character though, and we're happy to do that. Yeah,
for some of you right now, we're kind of like an extra. We don't even have a speaking part. We're just some dude like standing on the side of the, and on the side of the camera shot, just eating ice cream or something while something's happening over here that with Tom Cruise and whoever, right? But we want to get to that, be that supporting actor in your movie. And it made me think, when he was saying all this, it made me think of some specific clients that we have right now that are either in underwriting or just went through underwriting, and it's the infinite banking concept is it's very simple, but for a lot of people it's a lot to comprehend at the same time, despite its simplicity, and not everyone is quite ready to take that plunge, so they want to dip their toe in and but yeah, right now I might just be an extra in somebody's movie.
Yeah, you might be. But speaking of people who are out there listening, we got to meet one of our avid listeners this week. I spent a lot of time with her and her husband. It was a lot of fun. So, hey, Carrie, if you're listening and driving right now.
On 1.7 speed.
On 1 point, I guess we're talking really, really fast.
So let's slow down what we're saying so that she can hear us.
Yeah. So if you guys are listening to this on 1.0 speed, you're probably listening too slow. You can actually listen a lot faster than you can talk. So go ahead and speed it up. You can get through this faster and on to the next thing. Or go binge more episodes much more quickly.
Right.
But anyway, we got some good feedback about making sure we're not promoting this as the panacea, the end all be all, which I don't think we've ever done. I do think this is the first place capital should go. We're big proponents of that, and we do that in our own lives. But it's definitely not the only thing you need to be doing in life with your money, right? There's plenty of other things you can be doing. This right here just needs to be a part of it.
Yeah. And the discoverer of IBC, Nelson Nash, in his book, Becoming Your Own Banker, he talked about, when he had this epiphany of really part of what he was already paying high premium back then. What he needed to do was pay more premium, but also just change his spending pattern. The sequence of where his money went. Like Dave was just saying, like we believe, and our brethren in the IBC world believe that this should be the first place, the foundation of your wealth strategy, whatever that is. You might be a real estate investor, maybe you're a stock market person, maybe you have your own business, whatever that may be. But this is the place where capital should go first. Right, so that doesn't mean if your company's got a 401k that you shouldn't be in that company's 401k plan. We choose not to be.
We choose not to be, but we don't advise one way or another.
Right,
that's a decision you make on your own.
Our job is to encourage, educate, and ultimately, I'm not trying to become your banker, and Dave's not either. Right, we want you to become your own banker, but ultimately, the decision's yours. But we have most people just like I did. It took a while, but I came to the conclusion that I didn't want to put any money in there anymore because I just wanted that much more control. So,
Or maybe not put as much as I was putting because I need some money going towards something that's going to create certainty and guarantees, and a tax-free retirement income to pull from for that sequence of returns risk. If you don't know what that is, look it up because it's a big deal. When you get to that retirement age, you need somewhere else to get access to capital while the market is down, so you're not pulling money out of a down market. So where is that going to be? For us, it's going to be inside policies because I can access that growth tax-free. 30 years from now when I'm maybe done actively producing, which I don't think will happen. I think we'll always actively do something, but...
No. There's a top performing agent here that's 76 years old.
Yeah.
Still loves what he does.
Those guys don't slow. I mean, they slow down, but they don't stop.
Yep.
So yeah, it's a good business.
And there's a tremendous amount of expertise, over 30, 40, 50 years in the business as well. They've weathered a lot of storms. They've seen a lot in the business cycle as the Fed manipulates the interest rates up and down.
Yeah, well, good lead in. Speaking of interest rates, so one thing that really came to mind that we want to remind everybody of, and we're going to spend the rest of the show talking about this, is loans and repayment of loans. So right now, because interest rates are higher than what loan interest rates, so if you go to a bank and try to get a loan, it may be double digits right now. Access to capital. You're talking double digit interest rates.
Sure.
Well, anybody who's been stacking capital inside a properly structured cash value whole life insurance policy has access to capital for far less than that, which means they don't have to go to the bank, pay 10%, and go through all that the hassle. They just get online with the insurance company and say, I want this much money. It gets sent to them, and it's anywhere from 5 to 6% interest, loan interest right now. Which means a lot of people are now utilizing their cash value loans who haven't done so in the past when money was artificially low, 2 or 3%.
Sure.
So what that has done actually is it puts a little stress on the insurance company. They're prepared for it and they can handle it. They weather it just fine. But if you start thinking in the mentality of being an owner of this insurance company, which we are, if you have a policy with a mutual life insurance company, you are an owner of that company. You want that company to be successful, profitable, and paying a dividend out every year, and ideally having those dividends trend upwards year over year. And in order to keep that happening, we got to repay our loans. So if you have loans outstanding, I kind of take it for granted, but it's definitely worth repeating that, hey, if you've got an outstanding loan on your policy and you have money sitting in the bank because, I want immediate access to this $5,000 I have sitting in the bank, put it back in your policy. There's no reason for it to be in a bank when it could be in your policy for several reasons, right?
Yeah, I don't think I've ever really had a need for seconds. Liquidity that I can get to in a matter of seconds or minutes, right? Like a couple of days for a policy loan is generally fine. I think most of us, I run my household off of credit cards, grocery bills, gas, whatever. I pay as much as I can on a credit card, and then at the end of the month, I just pay it off. So that's my short-term liquidity. So, I'm with you. So even when rates were artificially low, Dave, the policy loan rate generally, and I'm going to speak broadly here, was about 5% from a typical mutual life insurance company. Would you agree with that?
Yeah.
Yeah. And I thought, gosh, the rates out in the market, right, have tripled, right? Mortgages were 2 to 3%, now they're 7 to 8, right? So I thought that the policy loan rates for most of the companies, and we've got some data where we've been able to see several mutuals and what their policy loan rates are, because we don't own policies with all of them, right? But I thought they could have raised policy loan rates higher, and been fine, and probably should, and frankly probably should have. And y'all have heard me say this on the podcast many times. I don't care what the policy loan rate is. I don't care. I care about the control. I care about my liquidity. I care about, I don't have a repayment schedule. I create it myself, and of course, I prioritize policy loan repayment. We've talked about it as well. We prioritize base premium, PUA premium, loan repayment, right? In this non-direct recognition kind of environment that we're in with this particular company. So, but yeah, I just say I want my dividend. I want it to be as high as possible. I want my policies to be as efficient as possible. If that means they have to, jack up a rate a point, I don't care.
Yeah. And frankly, if you're looking at rates, like, hey, what's my loan interest rate from a policy versus a bank? And that's going to be my ultimate deciding factor on where to go for my cash loan, then you're missing the whole point. Because Paul just listed a few reasons why, even if like it was for the last 15 years prior to this, where policy loan interest rates were higher than what you could go get from a bank. Maybe you could get a loan from a bank for 3% and your policy was costing you 5%. Who cares?
Right.
Because you have total control over that policy loan. Like Paul just said, you decide when you pay it back, how much you pay it back. Every dollar you pay back with some companies goes directly towards the principal, which means you're knocking down that principal, which means you're paying less interest and volume over the year. The ease of access to that capital, you can take it out, put it in like seamlessly.
Yeah, I mean, one of our colleagues said this morning. I thought it was nobody could have put it better. It's really an apples to oranges comparison, right? A bank loan or a credit union loan that you get, which is fully collateralized, right? With your stuff that you likely care about. There's just no comparison with a life insurance policy loan. It is the best loan that you can find in the free world. It really is. There's not one better. And of course, in the early days of our businesses, right, when rates were artificially low, people would say, "Well, Paul, I can get to money at 3%, like line of credit, HELOC, or whatever."
So they didn't fund a cash value policy.
No, they still did.
Okay, but some of them didn't, though.
But some didn't.
But some didn't. Be like, oh, well, that doesn't make sense because I can get 3% right now. Oh, how's that working out for you now?
Yeah, well, you can get a 3% loan, but you're also earning 0 on your savings. So it disincentivized thrifty people, right? Low interest rates, and it punishes them for being thrifty. And
Right.
You have to put money. It's all by design, almost, right? You have to put money in the market to make a return. So now everyone's getting 5% in their savings.
Yeah, you can get a high yield savings account right now, but how long is that going to last? Right? Interest rates go up, interest rates go down, but the process of banking goes on.
Who said that?
Nelson Nash.
Man, brilliant.
Yep. Yeah, and he knew what he was talking about because up until this point, most of us at our age, if you're, say, mid-40s, for the last 15 years as an adult, when you've actually taken loans from banks, it's been pretty low. And now all of a sudden it's skyrocketed.
Yeah.
And boy, it sure is nice to have access to capital.
Yep. And you're really going to be in your mid-40s like next week.
Yeah, and then you can follow me up a couple months later.
Man.
Right by the end of the year. Yep.
Are we early 40s right now?
No, I think it's still mid.
We're still mid, right?
I say like
Mid's
40 to
46?
43. 40 to 43 is early. I say 44 to 47 is mid, and then after 47 is late.
Oh.
That's what I say.
Okay.
That's personal opinion. So, mid 40s.
I agree with that.
Yeah.
But anyway, to sum it all up, in fact, we heard home office people today that they have money sitting in a savings account. Like, no, repay your loan. Repay your policy loans. I know Dave just paid off a bunch that we had out. He had outstanding from things he was doing. I just, you've heard the construction loan saga, so I'm paying my policy loans back that I used to fund the down payment for that opportunity, right? And I'm going to continue to do that. I've got a big premium coming up that I'm going to pay, so I'm going to prioritize that premium. But yeah, loans are meant to be paid back. The other thing, what was interesting is, IBC clients, right? Our clients, our listeners, they interact with their policies on a regular basis. They're either one policy, series of policies, whatever. So I found it interesting that there's some agents in there that are like, we need to help our clients with their policy loans, and I didn't really quite understand. But then I got to thinking, some of these people might have 80-year-old clients,
Yeah.
70-year-old clients. They're not computer savvy, but we tell people, yeah, you can log in on your phone and take a policy loan. It's that easy.
It could even be that somebody transferred ownership of a policy to somebody else.
Could be that as well. Yeah,
and they're not familiar with it.
There's no education there, so.
Yeah.
As you go through our process, we show you how to do that, interact with the client portal, and take policy loans, make loan repayments. It's always kind of a tutorial. It's very simple.
Yeah, and even if you're on a regular repayment plan, say they're pulling out $500 a month because you paid off that car loan and now you're redirecting that car payment back towards your own policy, or repaying the policy loan. At the end of the month, if you have an extra $1,000 hanging out in your checking account that you don't need, throw that against your loan too. There's nothing saying you can't pay more back quicker. Now with bank loans, if you do that, you're just giving the bank money back that you're never going to see again. You're just giving it back to them quicker, which maybe that's good, maybe it's bad. Depends on the productivity of the dollars. But with your life insurance cash value, it always benefits you to just pay that loan off as quick as possible. There's absolutely zero reason not to.
Yeah, I like prioritizing giving money to the life insurance company in whatever form it is. It's either premium, doesn't matter what type of premium, folks, base, PUA, or loan repayment. It's all money that's going back to a company that I part own, and I want that company to be as strong as possible. But I'm still first in line. I can still get to my capital if I need it. And I think people do forget, so I'm going to remind them right now, is that, depending on the company, but generally 2 weeks after you make a loan repayment or a premium, annual premium payment or whatever, that money becomes available to you, right? So if I make $1,000 policy loan repayment, 2 weeks later, I could, if I needed to, I could pull that $1,000 right back out, right? So again, just a reminder, this is how it works. It's quite simple. Your agent should explain that to you, how it works for your particular situation, your particular company that you're using. But yeah, there's no reason to, outside of whatever you need in your checking account to just run your household, everything else should be coming back into your banking system, right? Your dividend-paying whole life banking system.
Yeah, because it's interesting how it not only benefits you, it benefits the company, which in turn benefits you again. So if you start thinking like a business owner, hey, this is a business that I actually have ownership in. What do I want to see it happen? Some people today in the group are saying, why don't you guys just raise the loan interest rates?
Yeah.
Which maybe clients wouldn't like so much unless you really understand it, that, hey, that would be good for the company. The company needs to remain strong. And, frankly, the way you utilize your policy, you use your policy, and think like a business owner, because you are.
That's right.
You're a legitimate owner of the business, so you want to see it succeed.
Yep. And it's almost like, you're not only part owner of a mutual life insurance company, but your policy or system of policies is also a business, and it's a business that's guaranteed to succeed as long as you don't steal the peas, don't be afraid to capitalize. I won't go through all of them.
Think long term.
Think long, and that was a theme this week as well, and that's why I appreciate the people that run this particular company. These companies don't look at quarterly earnings, right? They just don't. They look at the next quarter of a century.
Yeah.
And that's, we're in our mid-40s. We should still be here in the next quarter century, God willing. And I appreciate that long-term outlook that they have. They're thinking of the stability of the company, the stability of the policy owners who are part owners of the company, and that's all taken into consideration. What's best for the company, what's best for the policy owners, what's best for the agents. Always trying to make it, help them develop better products for you, for us, that we can use and own ourselves. So it's Yeah, just great all around.
Yeah, because at the end of the day, what matters most is that policy's still in force when I need it the most, which maybe I don't need it the most, but my family needs it most, which is the day I graduate, right?
That's right.
That's what matters.
You
And
walk out, I'll walk in with cash.
with cash, tax free.
That's right.
Yeah. So, well, cool. That was just a quick hit on a very important topic that sometimes gets overlooked because we think it's so elementary and so basic. But
Yeah.
I'm willing to bet there's a few people listening that are like, I do have some cash sitting in the bank account and I do have an outstanding loan. Why haven't I just gone online, taken the 2 minutes to log in and send that cash back to my policy? So make that happen today before you forget.
And we did try to do an episode with our wives who are here. They're in his room or they're roaming around the hotel somewhere. We were going to do the Real Wives of IBC episode that we've discussed. So we're going to put that on the back burner. And when we reconvene all together, maybe in Tennessee at my new house, maybe we'll do it. Maybe we'll do it then.
Maybe after a few drinks. We got to loosen up.
Even
you know,
better.
'cause it's a little nerve-wracking your first time or two.
Yeah,
So
that's true.
We gotta get them comfortable in front of the camera and the mic.
Yeah. Tammy shouldn't drink anymore, though.
We had a fun week. We had a really fun week, and we got some cigars we need to go try out today. So, you know, hey, just because we're gonna smoke cigars, that doesn't mean we're gonna get a tobacco rating. So,
Nope.
You can have a couple cigars a month.
Yep.
And underwriting will let it slide as a non-tobacco. So we're gonna go enjoy some hand-rolled cigars. We went last night to a restaurant here in the Bahamas.
This is cool.
Two cool things about this restaurant. One, they had a dude there hand rolling cigars. No kidding, making cigars fresh and handing them out to us. So we're gonna puff on those. And then he also has in his cellar the third largest wine collection in the entire world.
Third largest private wine collection in the world. There's a bottle down there from 1727
It's like 1727, the oldest bottle of wine in the world.
in the world. And he buys them at these auctions and
That
stuff.
one was $200,000.
Yeah.
I saw one rack the size of this picture right here.
$5 million.
It was $1 million worth of
million.
wine on that one single rack, and then it was like a catacomb of wine down there. It was pretty amazing.
200. Yeah, unbelievable.
Yeah, so pretty cool. There's a lot of cool things just kind of hidden in the nooks anywhere you go, and we found it in the Bahamas. So hope y'all can get down here sometime. It's a lot of fun. We swam with the pigs today.
We did. We fed them too.
Yeah, we fed pigs, real life pigs on the beach. So it's another thing you can do down here.
Yep.
Yeah. Well, all right. I think our wives are waiting for us, and we got to get to dinner. So it's been a good week. Hope you guys have a good week, and we'll catch you next week with a new episode. Until then, control your capital.
Oh, you did a little like click thing. Did you hear that?
I did. I don't know if it comes in over the mic. You just messed it up, so we got to start over again. So
All right, go ahead.
Okay. Until next time, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle in a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.